And of course, with all this going on, inflation, geopolitical risks, uncertainty, what is one exception of all of this, of course, and it has to be commodities. Let's take a deep dive into resources with Ray Chan from Morgans. Ray, this is one of the first time in several decades of watching these markets that Australia is a beneficiary from geopolitical risks. This is a new angle, isn't it?
Absolutely, and also with resources, it move in cycle. Ever since the first cycle out of the China boom has faded. Also, obviously, the resources sector has spent a few years in the same vein. We look at the BHP down to the like of mid-30 level, and there we are. Looks like we are in another up cycle, isn't it?
Well, absolutely. Well, let's get into some of those commodities that are moving, or which ones aren't, I should ask, I guess. But okay, oil is obviously the big one at the moment, where that's going, and the massive implications for the global economy at this point. With forecast, well, we've seen it move above $130 a barrel. Forecast it could get much higher from this point. What are the likely drivers there? Then I guess when we also consider the political ramifications that maybe the US will cease importing any oil from Russia.
Yeah, that's true. Because prior to the current Russia and Ukraine situation, the world was looking at a shortfall of around 1 million barrels per day in oil. Now, with the current climate, the Russian supply of 7.5 million per day barrel per day may be displaced. As we mentioned earlier, yes, we may eventually get the Iran oil come back online, but with all the talk that going on at the moment, even the Iran oil sanction got eased, we only talk about 1.6 million barrel per day in addition. So net we are still in a net shortage of 5.9 million barrel per day in oil. That is exactly the reason why the oil price shoot up to the current level. Of course, this is likely to be short term. However, even after the current war, the sanction may maintain. So that creates a lot of uncertainty. With the uncertainty, that are likely to be continued elevated price in the oil price.
So, of course, what would you say from Morgans is the best exposure? I mean, Woodside and Santos are the two obvious names. Do you have a preference?
Our preference is Santos at the moment, because on the flip side, we have the strong fundamental on the oil price at the moment. But on the other hand, obviously, Santos has successfully merged with Oil Search. So there will be a lot of cost synergy coming out. Just one example is, if Oil Search manage to shut down the head office in Sydney, that will result in saving of hundreds of millions of dollars. So there's two tailwind for Santos at the moment. That's why Santos remain our favorite in the energy sector.